Good morning, ladies and gentlemen. Thank you so much for joining us this beautiful morning. Thank you for taking time out of your, I'm sure, very busy schedules to attend what I think will be a very interesting session today. While we wait for more people to join in, I'll just talk a little bit about what we are here to discuss today. The theme for this webinar is demystifying taxes, building compliant and competitive MSMEs. Tax sometimes can be a very interesting subject because there isn't a lot of information when it comes to doing our taxes, being tax compliant. And if we're building strong MSMEs that will scale, that will exist, for the future, it's very important that we build compliant systems and tax forms, a very important aspect of that conversation. We have curated a lovely number of experts today who will be taking us through some very important topics when it comes to tax. One of the most interesting ones that I am also very curious to listen to is the new Nigerian tax laws. I know if you've been living under a rock, which I doubt anyone here has, the Nigerian government passed some tax reforms this year. And a very important question to ask is, what exactly does that mean for you? What does that mean for my business? Whether or not you're an existing business owner or you will want to start a business, it's very important to understand exactly how these new tax laws benefit you and how we can take advantage of these new reforms. Very quickly now, because I don't want to waste so much time, our very knowledgeable experts are waiting to kick off the session. We'll just very quickly be moving into the opening remarks, which will be taken by Korede Demola Adeniyi, who is the Executive Director South for the Alternative Bank. Thank you very much. Okay, so while we wait for Madam Korede, you can just tell me where exactly you are joining us from today. Are you joining us from Lagos, joining us from Port Harcourt, joining us from Ibadan? Just let me know. I'm very interested in meeting new friends and making new friends from this session. So just tell us where you're joining from. I see a couple of people are joining in from Lagos. Thank you so much for joining, Lydia. Safe Skies, thank you so much for joining. Habib, thank you for joining in from Warri. Wow, last time I was at Warri was when I was like 9-11. Thank you, Blessing, joining in from Abuja. Oh, we have a couple of people from Karu, Nasarawa. Sometimes I have a hard time figuring out whether Karu is in Abuja or is in Nasarawa, but thank you all for joining. Awal, thank you for joining in from Kano. Oh, we have a couple of people from Maiduguri. Thank you, Christy Doko, for joining us. Do we have Madam Korede ready
Yes,
for?
please. Can you hear me?
Yes, you can. Thank you so much, ma'am.
Thank you so much, Anjali. Good morning to everyone. Sorry about that. I had a slight glitch. I'm very excited to be here today, and I know you will have a good time. Thank you to everyone for joining this conversation, because we believe every business owner in Nigeria needs this webinar right now. We're talking taxes, we're going to talk compliance, and ultimately we'll talk about growth of your business. These three words either hold a business back or propel it forward, depending on how well you understand them. Across Nigeria, MSMEs, aptly called micro, small, and medium enterprises, power our economy. These businesses account for nearly 96% of all enterprises in the country and contribute roughly half of the GDP, the national output of the country. They also provide livelihoods for more than 80% of the country's total workforce. These figures shows that MSMEs are not peripheral players. They are central to Nigeria's economy because they create jobs, they solve problems, and they move communities together. But now, these businesses are navigating a changing tax landscape. sometimes without clarity or confidence. And this has further been exacerbated by the reform of the tax bill, which will take effect from January 2026, just a few days away. That uncertainty will affect competitiveness, access to funding, and long-term sustainability of these businesses. But today's webinar will change that. Our goal is extremely simple. We want to strip away the confusion around the new tax laws and give you the knowledge to stay compliant so that when you understand the rules, you can focus on truly building your business, expanding your business, and winning at your business. At the Alternative Bank, we are committed to empowering businesses and individuals alike that form the backbone of Nigeria's economy. We're not going to just talk about taxes and compliance. We're going to talk about how we can help you thrive, grow, and achieve the potential you have set for the business. And this is why we put this together for you to gain practical insights, clear guidance, and actionable advice to stay ahead of the curve. Today, we would help you see how access to finance and tax compliance are not a burden, but you would use it as a strategic advantage to grow your business, a path to having stronger structures in your business, better financing opportunities. Of course, that means you can get to wider markets, and then you'll see real growth. So we're very excited to partner with you on this journey because we only succeed when you succeed. That's the model we run, and we're grateful for your trust over the last 2 years. And if you're new to the Alternative Bank, you would also get to hear about this model we run and how we take care of our customers. We thank you for being here, but let me not waste your time. Let's get into the conversation that will shape the future of your business. Thank you very much.
Thank you very much. Thank you very much, Madam Kuridi. Okay, so there's something important that Kuridi mentioned now in her opening remarks, which is the Alternative Bank is deeply interested in your well-being as a customer and as a business. And that is what forms the basis of why we are here today. Very quickly, we'll be moving on to our next presentation. I see that a lot of people are very attentive. Please, you can just put a message, one thing you got from the opening address today, while we move on to the next segment of our conversation. See, I'm very, very excited, and I hope you're just as excited as I am. Okay, next, we're going to be having Mariam Mohammed, Head Business Banking MSME at the Alternative Bank, give us a brief presentation on MSME financing opportunities. Please use your clapping emoji as we welcome Mariam Mohammed to the stage. Hi, Mariam. Good morning.
Hi, Anguli. Good morning.
Morning.
So, good morning, distinguished participants. Good morning, fellow entrepreneurs. It's an absolute pleasure to be here. I think the conversation is critical at this time, and it's very timely. What we try to do at the Alternative Bank is make sure that all our partners have access to the right kinds of markets, the right kinds of finance, the right kinds of tools. So you find that it's beyond just financing, right? So before I go into my topic proper, and I'm going to be really quick because the crux of today's conversation is taxes. Even I am going to listen attentively, right? I want us to understand how non-interest banking works. Non-interest banking is a model that is founded on certain basic principles. One of them is that of absolute asset-based financing. So we don't do conventional loans. The difference between Us at a conventional bank is we don't give you cash and you return more cash. So I don't give you 100,000 and you give me 110,000. No, I will buy an asset and I will either sell it or lease it to you with a markup. So I know a lot of people think that it's semantics, but it is a fundamental difference. So to make that clear, that is why I said fellow entrepreneurs. We are entrepreneurs too. We trade, we buy, and we sell. So we are in this together. The other principle is that of ethical and compliant financing. It means that there are certain goods and services that we cannot partake in. Non-trust banking is founded on Sharia principles, so things like alcohol, things like arms and ammunition, things like pork. They are things that we cannot participate in. So those are the basic fundamental principles that we work on. Of course, we also work with a principle of fairness, which is one of our ethos as a bank. We must be fair, we must be empathetic, and these are also parts of principles of non-interest banking. So with that in mind, I will give you how we support small businesses, right? MSMEs generally. Edie has spoken about how the impact of MSMEs to the economy, to the nation, and it cannot be overemphasized, which is why we are doing all that we can to provide support for our partners. So you find that what we do is we try and make sure that we have a flexible approach to this. We do have generic products for financing, for liabilities, for access to markets, but we also work with clusters, we work with communities, we work with ecosystems so that we create tailor-made solutions for these sectors. So, for example, we have some core sectors that we create specific solutions for, things around the heart sector, health, education, renewable energy, transportation, agriculture. Those are focus areas. We are not limited to these areas, but these are areas that we believe contribute to the real economy. So other than that, I'd like to just, outline things we do to support small businesses. So I know that the topic said financing products, but I'm going to take it a little beyond that. So I'll start from my financing products. Like I said, it's asset-based. So we do inventory finance. We have products like AltBiz that do inventory finance. AltBiz is up to 5 million for now. You can get collateral free. We understand that collateral is an issue for MSMEs. Can do collateral free financing for inventory, up to 5 million naira. Depending on the business's existing turnover. We also have asset financing for up to 20 million. This is for equipment, generators, production equipment, any kind of plants, machinery, and equipment falls into this category. We do up to 20 million in financing for these assets. We also have, and these are generic products, like I said. We have specific tailored propositions in accordance with the needs of specific clusters, right? We have LPO financing through Supply Hub. We have specific agri products. We also work with partners to provide support in terms of guarantees, in terms of concessionary funding, so that we can provide more support. Now, I don't want to dwell on just financing products, but I'd also like to speak about are access to markets. So it's not enough for a customer to just have access to financing. A lot of times you find that many entrepreneurs don't even need financing. They need access to markets. They need a place where they can sell their goods safely. They need a place where they can expand the awareness of their goods and services. So we have several e-commerce platforms. The flagship platform we have is Altmall. Altmall is a B2C platform. It is basically for consumer financing. But imagine that I, as a business person, am selling dresses. I can actually upload them on Altmall and people can come and buy wholesale and buy in bulk, which means they can buy in bulk and the bank will finance them and I will get paid in full. This means that it has increased the spending power of the individuals that are buying. So where they would have typically bought one item from me, they can now buy 10 and pay the bank in installments. So you find that that is very, very helpful to a lot of our partners. We have other platforms where partners can upload their products. We have Alt Drive for vehicles. We have Alt Mobile. We have several of these options, right? We also have community ecosystem platforms that support community. So if you are part of an association or a cooperative, we have platforms that allow you to interact with between each other because there is nothing more powerful than collaboration. So we support that by providing platforms for this. Sorry? Okay. So in line with the conversation that we're about to have, I'm very excited about the conversation around compliance to the new tax environment. And I would like to say that in our bid to support this, we understand that computation for taxes are it's complicated even to the best of us, right? And even with the training, we all need continuous support. Just knowing about the tax laws and the implications sometimes just isn't enough. You actually need to be prepared for this. To this end, we have developed a platform which will go live in January. And this platform is a resource platform, all things MSME. So you can go on the platform, you can register your business, you can get a TIN, you can get a tax identification number, you can get invoicing, you can do your invoices, because now invoicing is going to be very, very important because you have to be able to capture and record all of your business activities. So this platform is going to provide that for our partners. We also have tax computation on that. We will have general business advisory services, and we will continue to improve this platform as the needs come to us. And that's why it's a partnership. Our partners are out there. There are so many diverse needs. There are so many diverse requirements. So we will continue to build on this platform so that we meet the needs of our partners to the full extent possible. So yeah, so essentially, by the time you have your cash flow management pat down, you have your invoicing, you have your tax computations, and you are able to track your business. Any new laws that apply will not impact you negatively. And that is the thought process. We are here to work through this together. We are here to actually learn together and improve on anything that we do have, just to make sure that our partners are building strong, resilient businesses, and the shock of change doesn't impact us negatively. So in closing, so that we can delve into this tax conversation deeper, I would like to say we remain committed to financing businesses, to supporting businesses, to uplifting businesses, and we look forward to an engaging discussion and improve and suggestions and questions and a deep dive into this conversation. Thank you very much.
Thank you very much, Miriam. Please, a round of applause with your emojis for Miriam and that lovely presentation. Hi, Miriam. We just want you to stay on the line for a teensy bit in case people have questions. So if you have any questions around Miriam's presentation, very quickly, we'll take about 1, 2 questions before we move into the next segment. Like I have said, and like as Miriam has said, we're very interested and excited to hear more from our conversations and from our panelists today. So we are not the main attraction, but if you have questions, we're very happy to take any questions that you might have. Okay, so I'll just wait a bit for 1, 2 questions. It doesn't seem like I see any question here. Okay, thank you very much, Miriam. So um, very quickly, just before we go into our next session, we have a little game for us to play. Now, if you've been paying attention, you might win something. If not, then I'm very sorry. I'm very sorry. Okay, so hi, Fisayo, are we ready for our games?
Yes, but I think um, the games will probably come after the tax presentation.
Okay. So you're keeping us on our toes. Love it. Thank you very much, Isayo. Okay, so moving on very quickly, we are going to the next session of our conversation, which is Nigeria's new tax laws and how they affect you. Like I mentioned earlier, this forms an important part of our conversation today. How the new tax laws benefits you as a potential business owner, existing business owner, and how it affects you as a person in addition to that. And for that session, we will be listening to Mr. Adeni Adeyemi. Mr. Adeni serves as the group head of tax at Sterling Financial Holdings Company PLC, one of West Africa's leading integrated financial services groups. In his capacity, Mr. Adeni oversees the strategic management of the group's tax affairs, bringing extensive experience across tax compliance, advisory, and technology. Mr. Denny has a track record of leading and delivering over 300 tax projects. So trust me when I say that we are in good hands today. Mr. Denny is dedicated to building sustainable tax frameworks, leveraging technology to optimize tax processes while fostering the development of future leaders in finance and taxation. A round of applause, please, for Mr. Denny. Thank you very much, Mr. Denny. You have the room.
Thank you, Awulika. And good morning to our distinguished guests. I'll just go ahead and present my slide. Just give me a moment. Okay, fantastic. Now, this morning, we're going to have very interesting conversations about the Nigerian tax reform. I believe everyone must have heard about the Nigerian tax reform. You must have heard different views, opinions, positions about what is going to happen. Governments may take money from my account without my consent. I would not be able to operate my account without a TIN. You know, there are all sorts going round. But I want to assure you that we would seek as much as possible to clarify some of these things and tell you the truth of the law. I mean, let you know what the position of the law is based on this matter, let you know the benefits that you stand to have based on the tax law, and particularly as medium-sized and small businesses under the law. So as a background, we have always had various tax laws in Nigeria, but we have challenges with some of those laws. Some of them impacted on the competitiveness of our SMEs. Some made businesses difficult. And everyone that operates business in Nigeria, at the minimum, knows about multiplicity of taxes in Nigeria, knows about the extent or the extensive administrative obligation, which would usually result in very burdensome tax or burdensome time to comply with tax obligations. So those are some of the things that this law seek to change by making our tax laws more efficient and more aligned to the emerging economy and how businesses are supposed to be done globally. So we'll look at some of the key provisions of the law and what they mean for individuals, small businesses, and the wider economy. And what you should understand is that when it comes to taxes, taxes are not just for government revenue. They are also the way that by which government regulates behavior or incentivizes certain actions. So when you hear tax, let us not always look at it from the point of revenue only. Taxes are also used by government to regulate behavior. Governments intends to support the development of small-sized businesses in Nigeria, and it is very clear within this law that that is the intention of government. What has the government done in this law? Government has reduced the administrative burden of SMEs. Government has increased the threshold to qualify for tax payments. So as much as possible, most of our SMEs will have no tax obligation. Their obligation around taxes will only be administrative to a large extent. So I will just walk you through some of these things. But when you hear about the tax reform actually produced 4 different laws. When you hear a reform, the end of a reform will usually lead to either a regulation, a law, a policy. So reform are not a standalone clause standalone by themselves. So when you hear the pension reforms of 2014, the pension reform of 2014 led to the Pension Reforms Act of 2014. The insurance reform of 2025 led to the Insurance Act of 2025. So any reform will always lead to either a policy, a law, a regulation. So the Nigerian tax reform of 2024 led to 4 different laws. So when we talk about when we talk about the tax reform in Nigeria, we are essentially talking about 4 different laws that was produced by the 2024 tax reform in Nigeria. So I will just quickly, briefly educate you about some of those acts before I then get to the specifics, particularly the areas that impact on your business. Now, one is the Nigerian Revenue Service Act. Nigerian Revenue Service Act is just an amendment to the FRS Establishment Act. So the FRS Establishment Act is the law that established the FRS. The FRS is the Federal Inland Revenue Service as you know it. They will now be renamed as the Nigerian Revenue Service with expanded power and mandate to collect tax on behalf of the Federation. beyond the federal government. So what you used to know as the FRS Establishment Act will now be the Nigerian Revenue Service Establishment Act. So the FRS under that law now has power to collaborate with state government to collect taxes. And what that would mean really is that one of the loopholes that taxpayers have explored over the years is to play the game of if the federal government comes, you probably tell them that the state government is the one to collect this tax, and everybody plays that game. Because the FRS is now empowered to collect taxes on behalf of the federation, it will now be difficult to continue that game. So the FRS does not just collect tax for the federal government alone going forward. The FRS will now collect tax on behalf of the federation, and they also have extended power under that law. The Joint Tax Board, as you used to know it, is now reformed as the Joint Revenue Board with powers to focus beyond tax to every matter on revenue. So they will have power under that law to focus on things that have to do with government revenue. So levies in the states, government levies, government taxes, all those things will be under the purview of the Joint Revenue Board. But it will still be an advisory body that where all the state inland revenue service in Nigeria sits, and together with the Nigerian Revenue Service to talk about matters of mutual interest. So I've talked about two already. That's the Nigerian Revenue Service Act and the Joint Revenue Board Act. Those are two laws. But more importantly, the one you need to care about so much is the Nigerian Tax Act of 2025. So the Nigerian Tax Act is the new tax law. In Nigeria today, we have various tax law for different taxes. So when you talk about the VAT, you have the Value Added Tax Act. When you talk about the personal income tax, you have the Personal Income Tax Act, and you have various laws like that. What the reform has done is to consolidate all those laws that we have into a single law. So every matter that has to do with tax payments, what kind of income are taxable, what kind of taxes are supposed to be paid on those income, what kind of income are exempt from tax, and all those matters, they are now codified or written within the Nigerian Tax Act of 2025. So if you need a tax law in your country, you just need to ask for a single document. It's a 215-page document, Nigerian Tax Act, everything that has to do with taxes in Nigeria. So whether you call it the company's income tax, the VAT, the personal income tax, the stamp duty, the petroleum profit tax, everything is codified within the Nigerian Tax Act. So if you want to know about your obligations, that is the law to look at. And what I say about tax is that, tax is one of the things that everybody will be involved in, for their entire life, really. So the same way you should be interested in something as simple as the constitution of your country, everybody should have an idea of what is in the tax law of their country. You should VAT impact on you every day. You should at least know what is the VAT rate in your country. When are you not supposed to pay VAT in your country? So it's as basic as personal finance. It's as basic as being able to drive. So if you are not interested in any of the laws, any of the 4 laws that were introduced by this tax reform, you should at least be interested in the Nigerian Tax Act and seek to have a fair understanding, a basic level of the understanding of what is written in it. Now, the other law is the Nigerian Tax Administration Act, which is the law that then provides for when taxes are supposed to be paid, to whom is the tax to be paid. So all these taxes that is outlined within the Nigerian Tax Act, there is a time that is supposed to be paid, there is a person that you are supposed to pay it to, and then there is what is the penalty for not paying? When can you object to that penalty? What are your chances if you have a disagreement with the tax authority? Those things are specified within that Nigerian Tax Act. Now, to summarize on this slide, we be to say that there are 4 laws introduced by our tax reform, and you should have an idea of what those laws, those provisions are. But what I will get into now is the matter that is important to you. So what I have done is to separate it into direct taxes and indirect taxes. So direct taxes are the tax you pay on your income. So if you earn salaries, for instance, your tax is your personal income tax. Which is the one you collect through the pay as you earn system, which is what we call payee tax. You earn payee tax. That's the tax on your income. Now, another example of direct tax is a tax on your profit. So if you run a business and you make profit, after you have deducted all your expenses, you make profit, there is a tax that you are supposed to pay on that profit. And that is another, if you are a company, it is called the company's income tax. And if you are an enterprise, a partnership, it is still within the scope of the personal income tax. Now, what the law has done within this scope is to designate, for the purpose of companies, designate 2 types of companies under the law. In the current law, we have 3 types of company: a small company, a medium-sized company, a large company. Under the new law, you will have 2 types of company: a small company and a large company. A small company is a company that has a turnover below 100 million naira and has a fixed asset that is below 250 million naira. What does that mean for you? Take note that we say company. Within the law, if you run a business, there must be a vehicle, a legal vehicle that you are using to run that business. There are different examples of legal vehicles. An enterprise is a vehicle. A company is a vehicle. What the law intends to incentivize here is companies. So if you run a business in your name, you would have to pay tax in your name. If you run a business as an enterprise, you will still have to pay tax in your name. And if you make whether your turnover is 100 million or not, it doesn't matter. You will not enjoy the tax exemption that is applicable to small company. So only those who register their business as a company. So company, as you know, it is that you get the limited liability you register a limited liability company with the Corporate Affairs Commission. Those are the people that would enjoy the tax exemption for companies that have turnover of less than 100 million. What do you need to do? You think about it. If you make a profit if you have a turnover of 50 million as an enterprise, you get to pay tax. If you have a turnover of 50 million as a company, you don't pay any tax. What the government is seeking to do is to encourage everybody to formalize. Because what formalization means is that you register your business as a company. So that's why government has created an incentive for everybody that registers as a company. But I should also state here that professional service, whether you are within 100 million or not, does not qualify as a small company. So if you run a consulting firm, if you are a lawyer, if you're an architect, if you are into certain services that is of a specialized nature, you run a consulting, you run an accounting firm, you are an estate surveyor, whether your turnover is below 100 million and above, the small company rule does not apply to you. So all those professional service companies we still continue to pay tax. But if you are running anything other than professional service and you have a company, provided your turnover and your turnover is below 100 million and your fixed asset is below 250 million, you will have nothing to do with company's income tax in Nigeria. The current threshold is 25 million. This threshold has been increased by 400% to 100 million. But I think the point to note really here is that for businesses running as an enterprise, you should go back and consider whether it is still profitable to continue to run as an enterprise when there is incentive for running a small company. Now, within the law also, there is what we call development levy. It will no longer be applied to large companies. Every company in Nigeria today pays all kinds of levies. There is education tax, which is 3% of your accessible profit. There is Nigeria Information Technology Development Levy. There are all kinds of levies. There are more than 10 levies that you have to pay beside your income tax. So all those levies have been unified, and it is now 4% of your accessible profit. But small companies are exempted from those levies. So if you're a small company, you are also exempted from those levies. Now, if you commit some money into research and development, you are allowed to take as much as 5% of your turnover as an allowable deduction. If you're a company and you invest in research and development, you're allowed to take as much as 5% of your turnover as a deduction. Now, there's also what we call a 15% minimum effective tax rate for companies with turnover of 50 billion and above. I don't think that is applicable to us, but it's important for us to know that the exemptions that have been given to small companies is not for government to lose revenue. The idea and the philosophy behind it is that the bigger corporations should pay more for the incentives and the encouragement that government is giving to the small companies. So if there's anything to leave this slide with, is that there is an incentive for registering a company that is better than running your business as an enterprise. It is better under the new law to run your business or organize your business as a company than to continue to run it as an enterprise or in your own name. And I think more conversation will also get around that. Now, I come to the company's income tax, which is the part of the direct tax that impacts on that's the part of direct tax that impacts on individuals, enterprises, partnerships, and anybody that is not a company. Now, everyone, any minimum wage and below, they will not be subject to any tax. The minimum wage in Nigeria today, I think, is 80,000 naira or 75,000 naira. That is the national minimum wage. So anybody earning below 75,000 naira will not be subject to tax in Nigeria. And also, the tax band has been adjusted. So the way we pay tax in Nigeria is by the tax band. So you hear something like the first 800,000 of your taxable income, you pay 0%. The next 2.2 million, you pay 15%. The next 9 million, you pay 18%. Next 13 million, you pay 21%. Next 25 million, you pay 23%. And the upper 50,000, you pay 50 million. And above, you pay 25%. What that means for you is that sorry, Fisaya, do you want to say something?
Yes, sir. I just want to bring you back a little bit so that we don't lose some people in the audience. Just want to quickly should we just finish this slide and then we can take some questions before we
Okay,
continue.
let me finish this slide. Then we take some questions. Eh?
Okay.
Fantastic. So I was just saying that there's a an income tax table is changing today, and the impact of that is that for those who earn lower than 2 million naira today, they will have their tax 2 million naira per month. They would probably experience an increase in their net pay. You know, so if you earn less than 2 million today, you probably experience an increase in your net pay because based on the adjusted tax table, you're supposed to pay, you probably be paying less. Of course, that is premised on like, the assumption that you are paying the correct taxes under the current law. You know, and for those that earn more than 2 million and above, they would experience an increase, and then they are released within the law that you can use to minimize your tax obligation. You understand that? So that's for the personal income tax. So let me take some comment before we move on here.
Okay, thank you very much, Ms. Dani. We have a couple of questions from our participants. We'll just take about two questions, 2 to 3 questions, and then we move on. So Mr. Tomiwa Adeleke says, so if my business is registered just as a business name, what are the specific taxes I will be paying? And then he follows up with, are there no tax deductions for those who register their business as a business name?
Yeah, so there are tax deductions. So I mean, if you register your business as a business name, you are allowed to take expenses that you all the expenses that you have incurred as a as an allowable deduction. So the amount you use for repairs in your office, the amount of your rent, you know, you are allowed to take all those deductions, you know. But what I can tell you from a practitioner's perspective is that you have a lot of challenges because you are paying tax in your own name. So it tends to be more expensive than if you are paying tax as a company. So yes, as an enterprise or as a business name, you are still allowed some deductions. But the reality is that administratively, you will have a lot of debate on expenses with the tax authority. And in particular, you need to keep your records and be able to satisfy the tax authority that these costs, they are not they are business related costs, that they are not direct costs. Because as a business name, most of the expenses you incur will probably come in your own name. Unlike if you register a company. So if I am to render an advice to anyone that is running a business in Nigeria, provided you are running a turnover below 100 million, you should register a company. You should register a company. Yes, there's deduction for your expenses if you register as a business name. But if you are still below 100 million, if you are a company, you don't even talk about tax at all. The only obligation you have is just to file your tax returns. You don't talk about any amount to pay. And then you pay tax on the basis of the personal income tax table, which can be as high as 25%. But as a company, you pay tax based on the headline tax rate, where you can deduct your tax depreciation. You have you have a larger room for deduction as a company than you have as an individual. So, but I mean, to answer your question specifically, yes, you can take your deductions against your income or your turnover as an individual or as a business name, because business name are essentially taxed as if they are the same individual, you know. So the same tax that applies to you is what also applies to your business as an individual, you know. So Awoleka, I hope that clarifies.
Yes, thank you very much. Okay, so we have another question We have a couple of questions actually in the Q&A section, but we'll just take one more as we proceed into the rest of the presentation. Okay, so someone says, are services rendered by a medical imaging diagnostic company considered as a small company or professional services?
Now, there's a bit of ambiguity on what constitutes a professional service. The law says that services of a specialized nature that would normally require a certification to do. And it went further to say consultants, engineers, architects, lawyers. And I would believe that a medical imaging company would not qualify as a small company, even if you are, because it's a service business and the service is of a professional nature, So, and it's very difficult to say it's a vocational activity, or it's very difficult to say it's is conducted by artisans, really. So, to that extent, it may be difficult to say that you will qualify as a small company. But the way the law works is that whatever is not said expressly has created an ambiguity. So that is where you then require a specific tax advice for someone to really understand the way your business is, what is required to do it. Can anyone on the streets decide to become a medical imaging company? So, and in my view, it will be difficult to make a case for why a medical imaging company will be a small business, within the context of our law today. But those things can still be further examined. But that would be my initial comments on your question. Thank you.
Okay, thank you very much, Mr. Nee. We have a couple more questions, but we'll save them for the end of the presentation. Thank you.
Okay, fantastic. So at the personal income level, some of the ways that you can reduce your tax is make additional contribution to your pensions, whether as a business owner or as an employee. If you make additional contribution to your pensions, you can reduce your tax obligation. If you take up a life insurance, you can reduce your tax obligation. If you take up a mortgage on the house that you live in, that's the interest on that mortgage, or the markup on that mortgage, or the margin on that mortgage, irrespective of depending on the kind of arrangement that you are in, can help you to reduce your tax obligation. So as a business also, you can help if you provide food in a canteen that is within the premise of your organization, that can help your staff to reduce their tax obligation, because the amounts associated with the canteen or with the food that you provide on premises will not be subject to tax. So those are some of the ways that you can minimize your tax obligations under the new tax law. And one of the other things that will be important under the new tax law is to take care of the receipts, your annual rent receipts. So if you pay rent, that rent is deductible as an allowance to the extent of 20% of it. So if you pay rent of 10 million naira, you are allowed to deduct as much as only 500,000. But for you to get the 500,000, you have to provide a receipt and also disclose the name of your landlord to the government. So those are some of the ways that you can minimize your tax obligations under the Personal Income Tax Act. Now, the other thing that we need to look at under the direct taxes is the capital gains tax. Capital gains tax is a tax that you pay when you sell any item of a capital nature. So if you sell a house, you sell a car, you sell currency, those things are taxable under the Capital Gains Tax Act. The Capital Gains Tax Act today is at the rate of 10%. But under the new law, it is changing to your effective tax rate as an individual, and it is changing to your corporate tax rate as a company. So what that means is that your effective tax rate as an individual, for instance, is the proportion of your income that you pay as tax. So if you earn a total income of 1,000 naira and you pay 100 naira as tax, it means that your effective tax rate is 10%. So if you have any capital gains, if you sell a building, for instance, if you sell a building, you sell your shares, you sell some currencies other than Nigerian currency, that income, that capital gain will be subject to tax at the rate of 10%. And for a company, if you have a chargeable asset and you make a capital gain, it will be subjected to tax at the corporate tax rate. The corporate tax rate for small companies is 0%. The corporate tax rate for large companies is 30% today. It is envisaged and expected that this will be reduced to 25% in 2026 based on the law. But as of today, it is expressed as 30%. So if you make a capital gain, it is 30%. But there are exemptions. There are large threshold of exemptions. So for loss of employment, for compensation for loss of office, for instance, that means if you pay your staff for letting them go, termination benefits, or compensation for the loss of office, if it is below 50 million naira, they don't get to pay any capital gains tax. If you dispose your shares and the proceeds from that disposal is less than 100 million naira and the gains is less than 10 million naira, you don't pay any capital gains tax. You don't pay any capital gains tax. And I think that is good exemption for SMEs. So if you're an SME and you invest in shares, provided the proceeds from that investment in a year is less than 150 million, and the gains you make is less than 10 million, you are not liable to capital gains tax. And even if you are liable to capital gains tax, if you use the amount you got from the current sale to purchase another shares in a Nigerian company, you don't get to pay. You defer the payment of the tax until you sell the new shares that you have bought. So you also have opportunity for rollover so that you don't pay any tax today. And I think that is good. Also, if you sell the house that you currently live in, you are not liable to capital gains tax, even if you make profits. Even if you make profit on the house that you currently live in, but you can only enjoy that exemption once in a lifetime. So if you sell the current house, you enjoy that exemption. But if you buy another house and sell it again, you will no longer be entitled to that exemption. So if you sell your car also, if you sell at least 2 cars in a year, you are not liable to capital gains tax, irrespective of the value of the car. Now, if you sell a land that is in the same premises where you live, up to 1 acre, there is no capital gains tax on it. So what this essentially means for a lot of our SMEs is that you can literally avoid paying any tax in Nigeria. You can literally avoid paying any tax in Nigeria. The only thing that is required is for you to administratively declare your activities. The only thing that is required is to administratively declare your activities. If you disclose your activities to government and you don't force them to have to ask you or to have to use your bank account to show you that you are earning more money than you are declaring, then you don't have anything to worry about under the new tax law. Now, I'll quickly get into indirect tax. But maybe before I go into indirect tax, I should just ask Angelica if there are anything to clarify under the direct taxes.
Okay, thank you very much, Mr. Nee. We do have a lot more questions, not directly related to direct taxes, but we have a good number of questions. Do we want to take some of the more recent
So
ones?
take one of it. Take one of it. If it is related to something I'm going to mention in
Mhm.
subsequent slide, I'll just get into my slide right away.
Okay, so um, this is a question on capital gain, which you spoke a bit about. It said, Yetunde Adigun says, on capital gain, my gain on a treasury bill I bought last year was 6 million. This year, when I wanted to roll it over, 600,000 was deducted from the principal, and the earning for this year was still taxed. Is this right to be taxed retrospectively?
No, so what you earn on a treasury bill is an interest. Your interest on a treasury bill is subject to withholding tax. So the withholding tax, which I have still mentioned in subsequent slide, is an advance payment of income tax. But for treasury bills and short-term securities, so short-term securities are securities that usually have a tenure that is below 1 year. So a fixed deposit, a call deposit, a treasury bill, a commercial paper, those are examples of short-term securities. So every time you invest in a short-term securities, the bank or the financial institution is required by law to deduct a withholding tax of 10% on the interest you earn. So if you invest in treasury bill and you earn 6 million naira interest, that 6 million naira will be subjected to withholding tax of 600,000 naira. The withholding tax you pay is the final tax you will have to pay on that income based on the new tax law. Under the current tax law, after you have suffered that 600,000, you are still required by law to disclose the 6 million to government, and they will then subject it to tax, and then you only use the 600,000 as an advance payment of the resulting tax. But under the new tax law, the withholding tax of 10% that you pay as an individual is the final tax you get to pay on that income. So that is the clarification there. The income you earn from treasury bills is an interest under the law. It's not a capital gain, as it were. It's an interest, and the tax you suffer was a withholding tax. I suffer on that income, and I hope that clarifies. Now, I come to indirect tax because of our time. I come to indirect tax. So indirect taxes are the tax levied on goods and services. So you get to pay it when you consume. You get to pay indirect taxes when you consume or when you conduct a transaction. So examples of indirect tax in Nigeria will be value-added tax, which is what we call VAT as we know it. VAT in Nigeria is 7.5% of whatever you are doing. Then you have the withholding tax, which is an advance payment of income tax. So if you are a business, for instance, you send an invoice to us, when we are paying you, we are required by law to deduct a withholding tax, which can be at the rate of 2%, 5%, 10%, 20%, depending on the nature of the transaction that you are conducting. Now, there is another tax, which is stamp duty. Which is stamp duty. Everybody has one or two experience with stamp duty. Every time I send you 10,000 naira and above, you notice that your bank takes 50 naira, and that 50 naira is stamp duty on electronic receipts. So I will let you know about some of the changes under the indirect tax. And now, the first change I will talk about is the VAT. What has happened under the VAT Act is that some of the things that Nigerians do a lot of our people spend money on food, on education, on healthcare, on rent, on public transportation, and renewable energy. all these things are now either exempt from VAT or they are exempted entirely. So what that means is that if you are buying food, there is no VAT. If you are paying your son's school fees, your daughter's school fees, there is no VAT any longer. And it's not just exempt from VAT, it is zero rated. So what zero rated means is that so let me use the baking industry as an example. If you manufacture bread, for instance, bread is no longer liable to VAT in Nigeria. What that means is that before now, bread was actually exempt from VAT. And what that meant was that all the VAT you had paid in procuring raw materials for manufacturing that bread formed an expense to you. You are unable to recover that input VAT from government. But going forward, because it is now zero rated, bakers will be able to recover their input VAT from government. So all the VAT you paid when you bought the flour, the VAT you paid when you are moving that bread from one place to another, all the VAT you paid, you are entitled to recover it. So in your case, you don't have an output VAT. You are permitted within the law to submit a request for refund to government, and they are mandated by law to respond to you within 90 days. If they don't respond to you, the law allows you to take your claim against any tax, not even VAT. Any tax that you are supposed to pay to government, you can remove your input VAT from that tax. You can, but what is important is that ensure that your claim is legitimate and cannot be disputed. If your claim is disputed, you get to pay 200% of whatever you take from them. So that is the reform that has happened under the VAT Act. Hospital services are zero rated, so there's no VAT at the hospital anymore. And hospitals will be able to recover all the input VAT, the VAT they pay at the port on medical equipment, the VAT they pay at the port for all kinds of things that they import. They will be able to get that VAT back from government. And more importantly, the good news here is that those in the service business, for medical diagnostic, hospitals, consulting firm, banks, and everybody that provides services today, under the current law, we are unable to recover our input VAT under any circumstance. So the VAT we incur on the assets we buy, the VAT we incur when we pay our vendor, those things go into our expenses. But going forward, we will be able to recover it from our output VAT. So if you provide a service as a medical diagnostic person, for instance, you provide a service, you charge VAT on that service. When you collect that VAT, before you pay to government, you are allowed by law to remove all the VAT you have incurred. So you pay security services, you pay transportation services, you pay logistics, you pay all the expenses that you have incurred. The VAT you paid on all that expenses, you are allowed to recover it from the one you charge to your customers before paying the rest to the government. And if the one you are paid out is more than what you collected, you are still allowed by law to recover the excess in subsequent months. And I think that is expected to reduce inflation in our country. And the government is spending as much as 3.4 trillion on this incentive in 2026. And it shall continue like that based on the law. Everybody will be able to recover the input VAT they have incurred in the manufacturing space, or you are in the service business, you are allowed by law to recover your VAT. Now, the other bit of it is on withholding tax. As a small company, you are still required to deduct withholding tax. But if you are doing if you got an invoice for a transaction below 2 million naira, you can allow that transaction to go without deducting withholding tax. Withholding tax can range from 2% to 5% to 10%. There is a table that tells us what is the applicable withholding tax on different services. So if you conduct a professional service, for instance, it is 5%. If you are paying for a contract of service, somebody has claimed for you, somebody is selling something to you, the applicable withholding tax rate for that kind of service is about 2%. If you are paying dividends, there is a withholding tax rate of 10%, which you are supposed to take. So small companies are not exempted from that. You are still required by law to deduct withholding tax whenever you are paying to your vendors. Whenever you are sending an invoice to your vendor, if you are still below the 100 million, you are not required to charge VAT, especially if you have opted out of the VAT system while you have a turnover below 100 million. Individuals are not allowed to charge VAT under the law. So if you are an individual, if you run your business as an individual, you are not permitted by law to charge VAT. If you run your business as an individual, you are not permitted by law to charge withholding tax. So that's also has to be clear. And whenever you also provide services, your vendor is required to give you a receipt for the tax that they have deducted from you. So if you provide a service of 100 bank, we deduct probably a 2%. That's 2,000 naira. The
Hi, Mr. Nee. There seems to be some network connection issues. While we wait for Mr. Nee to come back to the segment, please ask more of your questions in the webinar chat. We'll be answering some of your questions. We already answered some of your questions, but questions directly addressed to Mr. Nee, please, you can put that in the chat section and identify that it is addressed to Mr. Nee. We also have our team on standby from the Alternative Bank answering questions as well within the chat section. So please ask your questions. We are absolutely here for you. Thank you. Okay. While we also wait, I know that there was a Mentimeter link that was shared earlier. Are we able to log into the Mentimeter? We have prizes to be won. So no sleeping, no dulling on this segment today. Please use a thumbs up if you've been able to log into the Mentimeter.
Sorry, you stopped hearing me, right?
Yes, Mr. Nee, thank you so much. You have the floor back.
Okay, fantastic. So I think you probably stopped hearing me when I was talking about withholding tax, right?
Yes.
Okay, so I was just saying that small companies are still required to deduct withholding tax whenever you are paying your vendors. It's just that as a small company, any invoice that is less than 2 million naira, you are not required to charge withholding tax on them. And then over-the-counter transaction, if you go to a ShopRite to buy things, you would not be required to deduct withholding tax from ShopRite. So that is considered over-the-counter transaction. So if you pay your mechanic, for instance, that can still be considered as over-the-counter transactions. And when you provide services to a large company, you are not, you are required to collect a receipt for the tax that those small companies deduct from you. Because you don't pay tax, because of your income threshold of less than 100 million, the withholding tax that is deducted from you, you can actually present that withholding tax to government and they will refund you within 90 days. If they don't refund you within 90 days, you are entitled by law to deduct the tax that you're supposed to collect from them from any tax that is due to government. And I think that is a good thing to consider. So as we begin to round up, let me pause here a little to take some of the questions that you may have, and the other things I will then talk about after now will be the administrative matters that you need to really pay attention to under the new tax laws. So, Angulika, let me take some of the questions or responses or comments from the audience before I go to the last part of this slide. Thank you.
Okay, so we'll take two questions before we move on to the last part of the conversation. The first question says, please, a business account opened that has not commenced actual business, would they still be required to pay taxes? More so, how much can be taxed from a business name account? And what advice would you give to an individual that is gainfully employed and still a business owner? The second question is, please, how do I link my tax number to my bank account?
Okay, let me start from the second question. You just need to take that tax number to your bank, and so they will give you a profile update form, and then that will be it. So is that simple? In our bank, for instance, we have a link where you can easily drop your tax identification number, and then we update your account with those tax identification number. Now to the second question of if you have a dormant account, all you need to do is to let government know that you have registered a business but you have not commenced operations. You need to write to government and let them know that you have commenced business, that you registered a business but you have not commenced operation. That is all that needs to be done. And let me clarify that you only get to pay tax, especially income tax, when you make profit. So there is no need for anybody to panic. If you have not made money, nobody is going to collect tax simply because money came into your account. Nobody collects tax that way. But the only reason why that may happen to you is that you have a business account, you are collecting money, but you are not disclosing to government the state of your affairs. You are supposed to tell government that even though I collected 200 million in my bank account, all the 200 million does not belong to me. This was what it was. It was either revenue or some money that somebody has paid to me. You need to keep records. If you keep records, nobody will collect tax simply because money came into your bank account. That's not the law. Income tax are paid on profit. If money can flow into your accounts severally, in fact, billions of naira into your accounts, and you still don't get to make profit at the end of the year. If you don't make profit, you don't pay tax. That's the law. You don't pay income tax when you have not made profit. And as a matter of fact, in Nigeria today, we have what we call minimum tax, which is 0.5% of your turnover. But going into the future, that minimum tax will no longer apply to small businesses. That means that if you don't have any profits, you don't pay tax. And if you make a loss, you are entitled to deduct that loss against your future profit before you begin to pay tax. So there's no need for anybody to then panic about money flowing into their bank account and tax. The only way they can link both is when you don't file your returns and when you have to leave government to assume or presume what your income is. And that is why the emphasis here is that administrative obligation established for small business and large business under the law must be strictly adhered to. If you don't make money, let them know you did not make money. If you have a bank account and you have not commenced business, let them know. You can't be wrong by disclosing your affairs to government. And there is no relationship between the money that is in your account and your tax obligation. There is no relationship between the money that is in your bank account and your tax obligation. Your tax obligation is based on the profit you have made on the business. And if you have not made profit as disclosed by you, which the government may also independently verify, if you have not made money, if you have not made profits, not just money, you can have revenue and not have profits. If you have not made money, if you have not made profits, you don't have income tax to pay. Yes, if you make profits, then there will be VAT obligations. If you're a small company, you're not required to charge that VAT. The person that you are providing the service to will be the one to self-charge himself the VAT and pay to government. So the only thing you need to bother about is the income tax. And be sure that if you say that you are still a company below 100 million, let your accounts be able to support your representation. That's what is important. So just to clarify again, I think the bulk of that question is around whether the proportionality of tax and how much of your income will you pay as tax is based on profit. So first of all, we must establish that you have made profits. If you are a company that is below 100 million, you pay tax at 0%. If you are above 100 million, you pay tax at 30%, and it's expected to be reduced to 25% in the future. Now, I quickly get into the administrative obligations that you need to now think about. Now, clarifying the matter of tax identification number, what the law provides for is a tax ID. All banking institutions and financial institutions are required to obtain the tax identification number of taxable persons. Now, what is a taxable person? Who is a taxable person? A taxable person is someone that provides or exploits resources or provides services to earn an income. That does not mean it's very difficult under the law to say, for instance, that an individual is a taxable person. An individual can be a taxable person, but what is said are taxable persons. All enterprises, all business same are taxable persons. So you'll be required by your bank to provide your tax identification number. And by the way, the law did not call it tax identification number. The law calls it tax ID. So, and the law allows the tax authority to tell us what is a tax ID. Pending when the tax authorities will clarify, the banks will continue to designate the tax identification number as you know it as the tax ID. What we suspect may also qualify as tax ID going forward, and based on the withholding tax regulation, is that if you have a CAC registration number already, that can qualify as a tax identification number. If you are an individual, your NIN or your BVN may qualify as a tax identification number. But pending when there is clear guidance from the tax authority, banks will continue to demand for tax identification number for you to operate your account. And by the way, the law did not also mandate that your account should be closed or restricted if you're unable to provide it. It's just that the law places a penalty on the banks for not collecting your tax identification number, which is why your bank may demand that you provide it or give you a timeline to provide that account as a business. So everybody is, and getting a tax identification number is not difficult. If you register a company at the Corporate Affairs Commission, your tax identification number comes immediately. If you are a business name, you can get a tax identification number within 10 seconds on the Joint Tax Board platform. If you have an NIN in Nigeria and you have a BVN in Nigeria, you can easily generate a tax identification number on the Joint Tax Board platform. So it's nothing for anyone to panic about. It's very clear. There is no, under the current law, there is requirement for the banks to restrict operation of bank account for businesses that don't have a tax identification number. That requirement is not in the new law. That requirement is not in the new law. It's just that because there's a penalty on the bank for not collecting your tax identification number, that is why your bank may mandate you to provide your tax identification number for you to continue to operate your account as a business. For as an individual, there must be objective indications that your account is used to carry on businesses, that you are earning income, that you are doing something. Your account must indicate that you are doing something, or you are conducting economic activity for us to mandate that you should provide a tax identification number. So tax identification number is only applicable to taxable persons, and taxable persons are those who earn income. So students will not be required to do that. Pensioners will not be required to do that. But there must be things within your account to suggest to us that you are not a taxable person, really. You are not a taxable person. So that's the clarification I want to make on the mandatory tax identification registration. But on another front also, there are so many government services that you may not be able to enjoy if you don't have a tax identification number. And that is why getting a tax identification number is free. Getting a tax identification number is free, and it can be done online. If you have a BVN in Nigeria, or if you have a NIN in Nigeria, you can actually generate your tax identification number within 1 minute. And our bank has also reached out to some of our customers, provided the link for them to be able to provide their tax identification number, and so that is not something to worry about. Let me just quickly clarify also that the law established what they call the Office of the Tax Ombudsman. The Tax Ombudsman is supposed to, they will call it the Tax Ombud, is supposed to adjudicate matters of disputes between the tax authority and small taxpayers. So if you are not satisfied with the assessment that government has levied on you, if you are not satisfied with the way that a tax authority has addressed your matter, you can actually reach out to the Tax Ombud. So where the government is going to set up the Office of the Tax Ombud, and that office will actually attend to matters of dispute between the tax authority and then the tax payers. So you no longer need to have money to go to the tax appeal tribunal. Tax appeal tribunal will probably be for large taxpayers, but small taxpayers and SMEs, they can go to small court of small claims, which is the tax ombuds that will be established in Nigeria. So I think the final thing I want to mention here is that there's electronic invoicing. All the transactions that you are conducting, if you conduct a transaction with a large taxpayer, as a bank, for instance, if you conduct a transaction with us, that transaction will be recorded on the electronic invoicing platform. So before you go to declare your income, the government already knows how much you earned from various services that you provided. So you want to be guided and ensure that you only disclose what is true and what is consistent with the actual transactions that you have conducted for the year. So let me try to summarize my presentation by leaving you with some action plans. One is that you need to, within the next 90 days, you need to review your turnover and confirm exactly where you are. You want to review your corporate vehicle. If you are a business name today, does this serve you to continue as a business name, or you want to consider incorporating a company or transition your business name into a company? You want to look at that. Ensure that your TIN is valid and you are registered with FRS on the tax promax, and validate your tax identification number. And you want to ensure that all your you have provision for deduction of tax from your employees, and you register for payee as an employer with your relevant state tax authority. You want to look at that. And record keeping is also going to be integral to the environment that we're going into. Record keeping is going to be integral to the environment that we're going into. So you want to explore digital tools. Business banking lead spoke to you about the platform that we have for SMEs. You want to explore that platform for access to digital tools for record keeping and related matters. And the final thing I want to say is that if your turnover is above 100 million, you want to register for VAT. And it's always important to keep an eye on what your turnover is, so that when you breach the 100 million threshold, you can register and begin the obligations that come with being a large company. So, Anwulika, I think I should stop there, allow some questions before we close the session. Thank you.
Okay. Thank you very much, Mr. Nee. Please, once again, a round of applause for Mr. Nee. This has been a deeply engaging session, a very interesting one, evidenced, of course, by the engagement and interaction from our audience today. People are very interested, and I appreciate the audience today for their rapt attention and just for engaging with the session through your questions. We will take about 5 questions today. So, Mr. Nee, I hope I hope you're ready for us. Okay. Yes. All right. So, first question says, please, I opened a business account 4 years ago and I did not operate the business, but money is coming in and going out of that account. Please, what advice do you have for me? Am I expected to go to the tax office and clarify myself?
Yeah, I think the best thing to do, if you look at it, you'll still probably be exempt from tax, but it's always good to have an accountant prepare a statement of affairs based on everything that has gone through that account, and you present yourself to the tax authority with those accounts, file all your outstanding returns, and you may not have any tax to pay. If you have anything to pay, it will probably be administrative penalty, but you need the guidance of an accountant to walk you through that. And we have within our business banking also, we have partnership with the business hub that could help you up through that process. We have partnership with accountants that can help you prepare your statement of affairs based on the last 4 years, file your outstanding returns, and regularize your tax affairs generally. But you need to show up at the tax office with your affairs, with the statement of your affairs for the last 4 years. That does not necessarily mean you have any tax to pay, but it's good to regularize at this point now.
Okay, great. I hope that answers your question. We have another from Ifeoluwa. It says, please, I want to ask, as a registered business name, there's a tax ID number on my CAC document. Please, what do I need to do to ensure that I am compliant? Also, how does VAT and all relate to business names, especially as a registered business?
Yeah, so the number that came with your registration, you are supposed to take that number to the nearest tax office to you. They will give you a profile update form so that you can have access to the government's online platform. So how does VAT then work? If you are a company that has turnover above 100 million, you are supposed to register for VAT. So registration for VAT is part of that, the access to the online portal that I spoke about. So when you go to the nearest tax office to you, they will give you a form which you are going to complete. They will send you an email to set up an account on a platform. That's the platform they call FRS Tax Promax. On that FRS Tax Promax, if you have a turnover of more than 100 million, you begin to file your VAT return on a monthly basis to government. So if you make 10 million this month, you tell them that you made 10 million, you charge VAT of 750,000, and this is the 750,000. You pay them on that platform. The platform is very easy to use. You can use your card to pay taxes on that platform. You can settle your tax obligation from the comfort of your home. But I think everything begins with you going to the nearest office to you to tell them that this is the number that I was given when I registered this company. I want to activate this number. So it begins with activating the number, and every other clarification or explanation based on the specifics of your business, you can get it from the tax office as well.
Okay, lovely. Thank you very much, Mr. Nee. Another question. Okay, I operate both a limited liability company and business name. In conducting my business transactions, if I am eligible to pay taxes, how can I go about it? Also, is it advisable to upgrade my business name to a limited liability company?
Yeah, I mean, that's the crux of what I've emphasized since the beginning of this presentation. Based on this new tax law, it is advisable for you to upgrade your business name to a company, because there seems to be a lot of incentives for being a company, especially if you are still within the small business category. And if you have any tax to pay, you would pay through the so if you are a business name, for instance, you go to, in Lagos State, you have a platform. There's the LRS portal. So if you go to lrs.net, there's a portal that allows you to declare how much you made, and then you can pay your tax on that platform. If you're a company, you go to your tax office to activate your tax identification number. They give you access to a portal. You can declare your income and your expenses on that portal and pay your taxes on that portal. You can pay through your card account to a virtual account that will be generated for you on that platform. And so that, I think that should answer the question of whether how do you pay your tax if you think you have tax to pay. That's the way to pay your tax. So first of all, you need to determine who is the relevant tax authority to you. If you're a company, if you are paying a tax on income, the relevant tax authority for you is the FIRS, or what we know as Nigerian Revenue Service. If you are a business name, an individual, an enterprise, a partnership, the relevant tax authority is the tax authority of the state where you reside. So if you live in Abeokuta, for instance, the relevant tax authority is the Ogun State Internal Revenue Service. So you go to Ogun State Internal Revenue Service. If they have a platform, an online platform, you can easily go there and file your tax obligations. If they don't have, you have to go to their office in Abeokuta to say, this is the income that I made, this is my expenses, this is the amount that is, but you can always get an accountant to run all these things for you at a nominal fee. And I think that should sort that. Yeah.
Okay, so we have a question from Mr. Habib Lawal. It says, good morning, sir. My name is Salisu Ado from Dawanau International Grains Market, Kano State. My question is, how true is the assertion that companies in agricultural sector and agro-processing are exempted from the new tax law? Kindly clarify.
Yeah, the companies in agri space, they're exempted for the first 5 years. If you run an agricultural company and it is new. If you're a new agricultural company, you're exempted from tax for the first 5 years. New agricultural company, not existing ones. You are exempted from tax for the first 5 years. That's the law. So you don't get to pay income tax irrespective of your turnover. So even if your turnover is 2 billion in your first year, for the first 5 years of business, you don't get to pay any tax in Nigeria, any income tax in Nigeria. That's the law. And of course, a lot of agricultural produce, uh, agricultural produce are also exempt from VAT. So you might really not have any tax obligation at all within Nigeria. Yeah, so I think that's a clarification on that, Monica.
Okay, so we'll take two more questions. Temitayo Odemi says, please, please, is an individual expected to self-deduct and pay withholding tax on treasury bill interest to a state internal revenue service in a situation where the bank failed to deduct?
So let me quickly answer one more question on the agri business. Yes, the directors of an agri business are still required to pay their personal income taxes, despite the fact that the agricultural company is exempt from tax. Just to clarify that, the employees of an agri business are still required to pay their personal income tax. Only the company is exempt from tax. Now, treasury bills. If your bank did not deduct withholding tax from your treasury bills, that becomes the liability of your bank. You don't need to do anything, you know. So government has another way for extracting the omitted withholding tax from your bank. So, but you don't have to do anything really. That becomes the headache of your bank.
Okay, thank you very much. Before we go to the last question, I'm sure everyone can see the screen, the Mentimeter up on the screen now. Please use the code 54953154 to join in the Mentimeter. Like I mentioned earlier, we have a couple of prizes to be won today. So the link to the Mentimeter is really www.mentimeter.com. We'll put that in the chat section right about now. Okay, so moving on to the final question. It says, if I have remote workers in other states, where do I pay their payee into? Lagos or their states?
Now, it is where those employees live. If you are a company in Kano and your employees live in Lagos, you pay their pay tax to Lagos. So wherever you live is where you pay your pay tax, irrespective of where the company that is paying lives, is headquarters, sorry. So as Alternative Bank, for instance, we are headquartered in Lagos. If we have staff in Kano, we pay their pay tax in Kano. And it's the same thing that applies to you. If you have remote workers, here in Lagos, but your office is headquartered in Kano, you pay their pay tax to Lagos. And all of this can be done online. All of this can be done through a branch of the Alternative Bank in Kano as well. So if you walk into any of the Alternative Bank branches, you can always tell them, yeah, you want to pay tax to Lagos State Internal Revenue Service, and somebody will be there to assist you with that. So it's not a problem actually.
Okay, thank you very much, Miss Dani. We have a couple more questions. We have our alternative bank staff in the chat section and in the Q&A section answering your questions, and we will be forwarding some of your questions over to Miss Dani after the session. And while we share the link to the recording as well as the summarized version of the slides, you have the answers to some of your questions. Please, thank you so much. A round of applause to Mr. Nee for this brilliant and deeply immersive presentation. Please use your emojis and just give Mr. Nee a round of applause, please. Thank you very much, Mr. Nee. We're moving on to another interesting part of this session, and I'll be handing over to my colleague, Mr. Fisayo, who will be taking us through the game session because I want to play too. So thank you.
Thank you very much, Anwili, and thank you everybody for sticking with us. We are really happy about the turnout, and we're actually grateful to you for participating. I hope you've been able to get or to gain one or two things that will be applicable to your business in the coming months and years ahead. The Alternative Bank is always here to support you through your journey. And some email address have also been shared in the comment section. Please feel free to reach out to any of us also privately for those that are seeking support for their businesses as well. So if you've all scanned I'll take it that we've all scanned the QR code, as I would like to begin the games now. Once I begin the games, I don't think you'll be able to join. Maybe you'll be able to join halfway. So the idea for us is just to test your knowledge of everything you've learned and heard today. At the end of this session, the first three participants are going to be getting gift vouchers courtesy Alt Mall. So that's the first three, the top three participants in the Mentimeter games will be getting shopping vouchers courtesy Alt Mall. So I will be starting the quiz right about now. Okay, so you have 15 seconds to answer each of the questions. Okay, is it going well? Ooh. So the correct answer to the question, oh, we see more people responding. Okay. So I'll be showing the second question now. Which of the following is not exempted from personal income tax under the new reforms? Which of the following is not exempted from the personal income tax under the new reforms? Okay, so I'll be showing the responses now. Awesome. It seems like some people were following, and for those that were not necessarily following or are missing some of the questions, please note that we'll be sharing as I mentioned earlier, we'll be sharing the correct answer is okay. So the correct answer is option C. Now to the next question. What is the new rate for VAT on luxury goods and digital products as per the 2025 tax reforms? What is the new rate for VAT on luxury goods and digital products as per the 2025 tax reforms? This should be an easy question for us to all get. Hopefully we all are able to get full points or full marks for this. Also note that speed of responses count. So if you get the same amount of answers as the next person, the ranking is going to be according to how fast you're able to respond. So it's more like a fastest fingers type session. I'll be showing and revealing the answers now. Okay. So 40 people said 7.5%. The correct answer is actually 10%. So it shows that we still have some catching up to do. Next question, which of the following categories is exempt from the new personal income tax rate? Which of the following is exempt from the new personal income tax rate? Do you all have our answers in? 5, 4, 3, 2, 1. And 35 people said, or 36 people chose B. The correct answer is B. So congratulations if you are forging ahead in the journey. Some of you probably see yourselves falling off, and that's okay. But I think you can still catch up with the next few questions that we have. We just have about 4 or 5 more questions to go. What tax band applies to individuals with annual income of 2.2 million naira under the new PIT structure? That's the personal income tax structure. What tax band applies to individuals with annual income of 2.2 million naira under the new personal income tax structure? I'll be revealing the answers in 5, 4, 3, 2, 1. So 36 people chose B, or 38 people chose B. So 38 of you are correct. The answer is B. Somebody is doing mago, but it's okay. Which of the following is not the recommended action for small business owners in the next 90 days? This was highlighted. These were highlighted by Mr. Nee during his action when he was talking about the action points for the next step that you need to take within the next 90 days. So which of this is not a recommended action? Keyword is not. I will bring the answers in 5, 4, 3, 2, 1. Okay. So we have 30. Wow, there are so many smart people in the room. We have 34 people who chose. Oh, 35, the answer is. Okay. So a lot of us think that the answer is C. I'll be revealing the answers shortly. The correct answer is actually C. For our next question, what must MSMEs with an annual turnover of 100 million or less do to be exempt from the withholding tax on certain transactions? This was a question that was asked by one of our participants and was also dealt with extensively during the course of the presentation. So what must MSMEs with an annual turnover of 100 million or less do to be exempt from withholding tax on certain transactions? Okay, how are we tracking? 20 people think it's B. There are a lot of competing varying responses. The correct answer is register or VAT. Now, what is the cap on deductible donations under the new tax reforms? What is the cap on deductible donations under the new tax reforms? Okay, I'll be revealing the answers in 5, 4, 3, 2, 1. The answer is 10% of profit before tax. So 18 of us were able to get that right. So 20. The next question. What is the role of tax on board under the new tax reforms? This was the very last thing that Mr. May spoke about in his presentation. What is the role of the tax on board under the new tax reforms? Okay. Wow. There are competing sections of responses here. Okay, so the correct answer is somebody is changing their mind. The correct answer is actually C. That's actually protect the SMEs. Now, this is for the big review. Can somebody please do a virtual drum roll to review how well we've done and the winners of
Drum roll.
okay, so I think we're still waiting for it to collate. Okay, so I'll check this out and I'll be revealing the winners before the session is over. Thank you very much. Amoli.
Okay, thank you very much, Fisayo. We'll be moving on very quickly to the last segment of our session today. We have Mr. Chukwemeka Agada, Regional Sales Manager at the Alternative Bank, to give the closing address. But before he does, I just want to make sure that we all had an interesting and deeply insightful session today. Once again, I would just ask that everyone in the chat section gives us a line to a paragraph about something important that they've learned that they will be taking into the new year and they'll be implementing actually from now on. So while we are responding in the chat section, we'll just have Mr. Chukwemeka go ahead with his closing address. Thank you, Mr. Chukwemeka.
Okay, thank you very much, Angli. Good morning once again to everybody. My task today is one that has been made quite simple by the speakers who did a remarkable job already. Very interesting, I must say, very educative, very insightful. I will start by thanking you all for being a part of today's conversation. As we come to the end of this session, I hope you now feel empowered to approach the upcoming tax changes with clarity and confidence. As already emphasized by those who spoke earlier, everyone participating today is a key player in our nation's economy. And it is crucial that we not only navigate the complexities of tax compliance, but we also leverage them to fuel our growth. At Alternative Bank, we are committed to being a partner in your success, and from providing insight into tax laws to offering tailored financing solutions, we are here to support you at every stage of your business journey. Remember, tax compliance is not just about following regulations. Rather, it is about positioning your business for long-term success. So, You have to embrace it as an opportunity and use it to unlock doors to better financing, larger markets, and stronger partnerships. Thank you once again for your time and participation. My colleagues are on standby to continue to respond to your questions. And then you can also reach out to us through all the touch points of the bank for additional questions post this webinar session. Thank you very much, and we really appreciate your making our time to be with us today.
Thank you very much, Mr. Chukwemeka. And we have come to the end of our session today. We will be reaching out to the winners and the winners of the Mentimeter Games after the event with your little gifts. Thank you. Thank you, Temitope. We really appreciate this. So we'll also be sharing the link to the recorded session as well as a summarized version of the slides that Mr. Nee presented today. Thank you all once again for coming to this session. And at this point, so at this juncture, we are bringing the event to a close.